Trade wars continue as the U.S. Imposes 104% tariffs on China goods effective midnight last night. Also, the China retaliated with a 50% tariff on U.S. goods, taking their tariff to 84% on U.S. goods. Of course, we export less, or the U.S. exports less goods to China than the U.S. imports from China. So it's kind of pushing on a string there. We are seeing U.S. stocks nevertheless continue to move to the downside. We are seeing U.S. yields continue their move to the upside. The 10-year yield is now up to 4.428%. That's up from about 3.88% just last Friday. We have a 10-year note auction at 1 p.m. It would be interesting to see what kind of global demand there is for the U.S. debt, given all the circumstances going on with the trade war that continues. The dollar is lower versus the major currency pairs. I'll talk about three of those major currency pairs: the euro versus U.S. dollar, the dollar versus yen, and sterling versus U.S. dollar in this video. So let's get started. Looking at the euro versus U.S. dollar on a 4-hour chart, this area right through here was the peak. You could see it was up and down as the market tried to figure out what it wanted to do. And we've re-entered into that area and trading last week and this week. And the price is currently trading above the low of this swing area after testing the low of the swing area, the up and down swing area in earlier trading today. I'm going to take this off and zoom in and you'll see what I'm talking about. So come back here. You can see that the low price in trading here today moved just a little bit outside of that lower range of that red box, which came down to this level right here. We also stayed above the 38.2% retracement of this move to the upside right here. Remember, yesterday we came down to test a 61.8% retracement and found early buyers against the 100-bar moving average. That helped push the price higher. And again, the continuation higher today came down to the low of that swing area, finding support right here. So watch 110. It also happens to be a nice natural level at 110. If the price can hold that level, then the buyers can remain in control. On the top side, we do have the high price from last week at 111.448 as the next key target. And then we start to go toward this high area right through here where we had a ceiling in place right here at 112 to 112.13. So 111 type area, and then 111.44 up to 112 are the next key targets on the top side. On the risk side, going below the 110 level and staying below that level would be more bearish. Let's take a look at the dollar versus yen next. And if we look at the 4-hour chart of this currency pair, we'll highlight this yellow area right through here, this area right through here, where we had different levels going into play that form a bit of a ceiling through here initially. Again, this is a 4-hour chart. Then we moved above that level and traded above and below it. Tried to stay below it right through here. We did, but came back down to the 100-bar moving average before breaking to the upside. That's in the past, and that has an influence on the future as we found support buyers against that level on the lows on Friday and also in trading today so far. This area comes around the 144.50 level. If we break below that level, then it opens a door for further downside. We've again tested it once, we've tested it twice, and it has a history going back to this area right through here. So be aware of that level on the downside. The move to the upside in trading this week did find resistance against this swing area right through here. You can see it had both support and resistance back through here. And resistance first, support here before moving higher. We came back down to that area here, and then moved below it. Tried to hold resistance right through here at the beginning of the week, and then broke above it. In trading yesterday, we broke below that level and started rotation to the downside. So we are trading lower in the dollar versus yen. This is despite yields moving sharply to the upside. So just global selling of U.S. dollars. Finally, let's take a look at the sterling versus U.S. dollar. Again, we'll look at the 4-hour chart. When we look at the going back in time, I have to outline this swing area right through here where we had a number of different support and resistance levels near the 127.18 level. And including here and here, we broke to the upside right through here in trading. This week, we came down to that level. We moved a little bit below it, and then the sellers had the shot. They couldn't do anything with it. And then we established support against this in trading yesterday and the day before, and we started to rotate back to the upside. What I will say on the top side is we did hold this resistance right through here, and also against the 200 bar moving average on the 4-hour chart. That was kept the sellers in play, with the 200-day moving average also in play at 1.28134. We're back below that 200-day moving average. If you want, for traders, if you want to use that level as a close resistance level, you certainly can. The market tried to use that level as resistance in trading yesterday before breaking to the upside and trading here today. Now it becomes resistance again at 1.28134, the 200-day moving average. On the downside, getting back below the 38.2% retracement of this move to the upside would add to its bearishness. We are trying to do that right now. With the price trading right at that 38.2% retracement. If you get below that level, this level will once again become a focus for traders. Again, that level comes in at 1.27187. Be aware of that level. It's been a support and resistance over time. That's my look at the 3 major currency pairs to kickstart your trading day today. Good fortune with your trading. Bye-bye.